So the big question, why invest in cryptocurrencies? Now, most people would say because they want to generate profit, right? And that's why you would invest in anything. But I challenge you to think in a different type of way. Don't think of money, think of value. Why would anybody want to invest in anything? You would only invest in something if you think it's undervalued compared to what its fair value is, right? You think you can get it at a better price than what its price should be or what it should be in the future. Because if you're getting it at that price and you can hold it, then with time, its price will reach its fair value. Now, this is very easy to do, not very easy, but it's easier to do in stocks or with other products. In cryptocurrencies, a bit harder. So to know what the value of cryptocurrencies are, well, first we would have to understand what problem do they solve? And if they solve these problems, what value would they have? The great thing about this is that cryptocurrencies actually are looking to solve huge problems that we have in our fiat system, so our money system, and even in our securities system. And if they're able to solve these issues, then the potential value that they can have is huge. Okay, so when I'm saying problems that we currently have, well, let's take a look at some of those. There's a lot of issues with fiat. When I'm saying fiat, fiat means currency like US dollars, Canadians, British pounds. That's fiat. And when I'm talking about securities, I'm talking about stocks like Apple, Facebook, Netflix. These are securities. Now, cryptocurrencies aim to solve issues mainly in the fiat with money, but also with securities, even though they're not supposed to be securities, right? Now, first issue we have with fiat, governments can print as much as they want, right? The government can come out and say, you know what, we just need to print more money, and they do that all the time, every single year, almost every country, right? And that devaluates our currency, right? And that's why currencies are inflationary, and we can argue that, proper inflation is good, but it's not always controlled, right? And in some situations, for example, in Zimbabwe, inflation was going up so much, the government was printing money so much that if you wanted to buy a piece of bread, you would need to carry this amount of money, right? This is actual pictures of people going to buy something with this amount of money. And the funny thing about this is when they actually reach the store, that money was worthless. That's how fast or how high the inflation was. And this isn't the only country that went through something like that. A bunch of other countries went through similar issues, right? So you can't trust the government to do the right thing. Cryptocurrencies answers to this problem by being scarce, right? Not all cryptocurrencies are like that, but Bitcoin, which is the main cryptocurrency, is scarce. Meaning what? Meaning that there's a limited amount of cryptocurrencies, and there will never be any more of any Bitcoins generated over that amount. Nobody can come in and say, well, I'm going to print 10 more Bitcoins. No, that's it. There's going to be 21 million Bitcoins and never any more. And if we actually just go real quick on Coin Market Cap, which is a website that I'll go into later on, so no worries about that. And I click on Bitcoin here, you can see that the maximum supply of Bitcoins is going to be 21 million Bitcoins. There will never be one Bitcoin over that. Circulating supply right now, there's 17 million Bitcoins, and that's going to grow with time until we reach that. Again, we'll talk about that later. But for now, you see that it's scarce. So it's actually deflationary because some people are going to lose their Bitcoins, but so there's actually going to be less than 21 million. But that's something really nice to have. Having something that has value and nobody can just come out and say, okay, well, there's going to be more of it, right? Another problem is that there are high fees involved when you're transferring or using fiat right now. So if I want to do a wire transfer to somebody, the bank takes a cut. There's several intermediaries between him and myself. With cryptocurrencies, the funds can go directly from me to that person without anybody interfering, and fees can be very small. Now, this is a work in progress because we're not able, or cryptocurrencies are still not able to handle a very high amount of users while having low fees. Some cryptocurrencies are dealing with this better, but this is something that they're aiming and they are on their way to resolving, right? Merchant fees, whenever we sell something as a company, Visa takes a 3% cut, PayPal takes a 3% cut. We're sick of it. And that's an actual issue, right? If we take a look at, and even with other friends of mine who have different companies who actually rely a lot on sales, when they account for all the merchant fees that they pay, it's a huge amount, right? So it is an issue. And true cryptocurrencies, that is completely removed. Another issue is, there's always, and you hear about this every day in the news, financial institutions being, breached. So their security being breached, frauds happening. With cryptocurrencies, there is extreme security, and that's we will learn in the following classes when we learn more about the blockchain and how the funds cannot be hacked unless you're stupid with your private keys and all of that, which we'll talk about too. But if you are secure and you're on Bitcoin, for example, which has never been hacked, cannot literally be hacked in a way, then you have extreme security, right? Another issue that companies are unable to solve. Why? Because they are centralized. It's a centralized entity and they can always get breached. Another issue is that you have to trust somebody. And this is one of the biggest things. We're at a time where you don't want to trust anybody. Trusting somebody, can mean you losing all your money. You've seen the 2008 crisis when banks were just taking on too much risk and a bunch of people just lost all their money. With cryptocurrencies, you actually remove the trust. You don't need to trust anybody. Why? Because you trust the protocol. You trust the model, the blockchain, and that that works. So you don't need to trust anybody. And that's the objective, right? And that's why I say immutable. We'll talk about that later in the blockchain section. But these are issues that we currently have. When you're looking at the fiat or the money system, there has not been any advances in how we use money for ages. And cryptocurrencies are coming to say, you know what, we need to do this in a better way. And a lot of these problems are not fixed yet, but we are looking to fix them. Okay? And if they are fixed, well, then we can compete with the money system and the security system. And we'll take a look at that on another slide. This is actually a video here of Bernie Sanders talking with Ben Bernanke. So this is after the 2008 crisis, where the Fed, the Federal Reserve, which handles the money supply for the US economy, came out and bailed out banks. Now, most federal central banks, like the Fed, are owned by the government. In the States, they're actually a private entity, and they can do whatever. They can print money in the way they want, play with interest rates, and they can, in this situation, bail out banks. So they can take taxpayer money and give it to banks. And they don't even need to take your permission. They don't need to tell you why or who they're giving it to. And you can see in this video, Bernie Sanders, really cool guy, trying to ask, where did this money go? And this is the answer he gets, right?
Time of the gentleman's expired. Senator Sanders.
Thank you, Mr. Chairman. Welcome, Mr. Chairman. We have spent a lot of time in Congress talking about the $700 billion TARP bailout, which I voted against as it happens. Not a whole lot has been talked about with regard to the $2.2 trillion that the Fed has lent out. Now, I find it absolutely extraordinary that I wrote you a letter and I said, hey, who'd you lend the money to? What were the terms of those loans? How can my constituents in Vermont get some of that money? Who makes the decisions? Do you guys sit around in a room? Do you make it? Are there conflicts of interest? So my question to you is, will you tell the American people to whom you lent $2.2 trillion of their dollars. Will you tell us who got that money and what the terms are of those agreements?
We explain each of our programs. In terms of the terms, we explain the terms exactly. We explain what the collateral requirements are. We explain what
To
the
whom did you
rates are.
explain that?
It's on our website.
It's on our website.
Okay.
So all that information is available in our commercial paper
And who
program.
got the money?
Hundreds and hundreds of banks, any bank or that has access to the U.S. Federal Reserve's
Will you
discount.
tell us who they are?
No, because the reason.
No, I don't need to tell you who they are, right? So that's actually hilarious that they gave out huge amounts of money, okay? Huge amounts, way more than what cryptocurrencies are valued, you know? Huge amounts of money. And when they asked them, who did you give the money to? They're like, well, we don't want to tell you. So do you want to trust these people, right? Obviously not. So we agree that there are issues with the system that need to be resolved, okay? Now, let's go here to the next slide. If we are able to resolve these issues, then we can compete as cryptocurrencies with the stock market and not just the stock market, at fiat with the money markets as well. So when you're looking at what cryptocurrencies are valued at now, when this picture was taken, the cryptocurrencies were valued at 143 billion. So that's the total amount of money that all cryptocurrencies were worth. Now they're about 210 billion as of the date that I did this class. The highest that they've been was 900. But then when you compare that to other things, it's not that high. You compare that to Amazon, it's way smaller. Apple at the time of doing this video is now at $1 trillion. So it's higher than that. It's just the company Apple as of today is 5 times bigger than all cryptocurrencies together, right? And that's just one company. So then when you can imagine, you know, all companies, all stocks together, that's huge. And you know, cryptocurrencies, some cryptos are aiming to compete with some companies, right? You can have, you know, let's say a company like Uber. Well, you can have a cryptocurrency that decentralizes Uber. That basically comes out and says, you know what, there's going to be this app that you can use to get into somebody else's car as a Uber, but because there is no central company like Uber, we eliminate that. So you as a user, you pay less for your ride. The driver gets more because there's, again, no Uber. All the information is stored on the blockchain, and so everything is immutable. You cannot change anything. So if you want to give somebody 5 stars, the 5 stars cannot be changed. So it's very secure. And you would have to use a coin called something like Taxicoin or UBCoin or whatever, and that would be its own cryptocurrency. And it would make sense because people would want to use something like that because, again, less cost, faster, easier, cheaper for both persons. So makes a lot of sense, right? We could compete with that and we can compete with that. So if that happens, then the potential to grow is huge. Now, it doesn't mean that it will happen. Maybe it doesn't work out. But from what we're seeing, we're going in the right direction. Now, we're not there yet. We haven't solved these issues yet. But that's normal. You don't want to invest in something that is already complete. As an investor, you're looking for something that is not there yet. And you're investing in it, so when it gets there, you can sell and bank the cash, right? A lot of people want to invest in something that's already ready. But if it's already ready, it's already at its fair value. And you're not taking in the risk because there is risks involved in investing, right? You put money in something, you could lose your capital if it doesn't go the way you plan. But for everything you do, there is a risk, and you would have to weigh the risk for the potential reward. Now, the potential reward here is huge. The risk is also big because you can lose a lot of capital. But if this plays out in the way that a lot of people think it will play out, then the potential is huge. Okay. Now, looking at actual cryptocurrency prices, because then that's what a lot of other people look at, is just the price. And you can see here, we had this huge spike in price in January 2018. So that would be January 2018, where Bitcoin itself went up to $20,000. Okay. So in 2017, it was at 1,000 in the beginning. January 2017 was at 1,000, and in 1 year it went up by 20 times, right? So that's 2,000%, right? Huge. Then we had this huge crash where it dropped all the way down to 6,000, which is a 70% decrease. That would be it. 6 over, yeah. So that would be a huge drop, right? Now, if we go back on Coin Market Cap here, and we look at the price. So Coin Market Cap is the website that most people use for cryptocurrencies, where you can see all the cryptocurrencies that are available. There's other resources that I'm going to show you later. Even for this one, we're going to go through it more in depth later on. So if I click on Bitcoin here, and I look at the price of Bitcoin, a lot of people were attracted because of this huge move. Now, a lot of people are disappointed because of this huge drop, right? But you gotta have perspective here, okay? Something that went up from $1,000 to $20,000 that did 2,000% return can drop by 70% easily. That's normal. Because now it looks like it's too big of a drop, but compared to the upside, is it really? So if I click here on log scale, which log scale, a logarithmic scale instead of a linear scale, means it removes the dollar value. It removes the dollar price and it just looks at percentages. Because here you might say, look, from 1,000 to 20,000, it's big. But you know what? From 1,000 to 20,000 is the same thing that if you went from $1 to $20. Well, where's the $1 to $20 here? You don't see it because it's so small. So if you do log, you can actually see that when we were here at 20,000 and we dropped from 20,000 to 6,000, well, that's not that huge of a drop, because look, we were here at 200 and we went to 20,000. You know, so if we go to 20,000, that's 200 times, right? So it's 20,000% return. So if something does 20,000% return and then drops by 70%, is it really that huge? Not really. But if you're looking at prices, then you might think it's very big, right? But it's not. So take that into perspective. You know, in 2013, Bitcoin was less than 100, then it went from 100 to 1,000, right? So that's a huge return. So if you look at the log scale, we are in an uptrend. There are these periods where it retracts, which is healthy for any market, right? Especially once it has a huge move up. So even when you're looking at prices, the prices are looking good, right? The trend is upwards. Yes, there are pullbacks, huge pullbacks, but when you're looking at it from a longer term perspective, it's not actually that huge. You know, somebody who put in money, you know, anytime before, well, even somebody who put in money last year, they're up. You know, everybody literally is up. The only people who are down are people who bought at the highest high in January. Well, that might not be the case in a year if the prices go back up above that price. So there are a lot of problems that need to be solved. And because we have a lot of smart people working on a lot of cryptocurrencies, which we'll talk about, trying to solve these issues. And by solving these issues, you know, the value of these currencies will grow. There is potential for us as investors finding the right currencies, investing in them, creating a portfolio that could be either passive or active, and participating in that growth and doing that in the right way. So that's why you'd want to invest in cryptocurrencies. So I hope you're psyched about this as much as I am, because I put a lot of sense in cryptocurrencies every here and there, because I see huge potential in this industry. And in the next lectures, we'll be talking about little things that will help us invest better.